Hello, YouTube. After a long weekend, the stock market is starting off the week with a little bit of red. And today we're going to talk about why this is important. We had warning signs on our weekly chart that we did invalidate, but now the S&P is giving us those exact same warnings here. We now have number one, number two, and tomorrow we would get number three. Don't worry about this. We are going to come back and focus on that setup a little bit later in the show. But I want to show you that we don't want to be greedy because we're on a key pivot of 473.5, which goes all the way back to our all-time high here. And with greed still dominating the market, it was greedy a year ago, extreme greed 1 month ago, greedy a week ago, greedy yesterday, greedy today. And if the hype train does not continue for AI, when Samsung reveals their Galaxy S24 or their new AI phone on January 17th in San Jose, well, instead of being greedy, we want to make a plan and we want to think like Warren Buffett. Why? Because this is going to be so simple, but I guarantee that most viewers are not going to have the patience to actually let these patterns play out. And what I'm talking about specifically is that we want to see what happens here with fear and greed. We warned you about 4 weeks ago to what? To manage the risk in your account. That means setting stops, raising stops, and trimming. And until we see that pattern of lower lows and lower highs on the monthly chart, yes, I'm calling for a short-term corrective wave, but it does not mean that I'm flip-flopping. It means that we're looking at different time frames and we don't generally buy greed. We usually sell it. We also have a couple more warnings here year to date. I'm looking at what's been green. We talked about how volatility, the 10-year note, the dollar, the S&P, and the NASDAQ are all green on the year. And now, as I look through a little bit objectively, I'm also noticing that Raytheon, Lockheed Martin, Cameco, Uranium, Visa, MasterCard, Constellation Brands, Philip Morris, Altria, Disney, Walmart, and Costco were all green year to date. That does not give me warm and fuzzy feelings. So as we're going to the next section here, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. So what we want to do instead of being greedy, which is what it says in the video, and then we'll come back and talk about how low. But just as a quick preview, well, we could go down as low as support. So that's roughly 455. But what I want to really focus on is going through what I laid out on the weekend and just keeping a very simple story, because what I mentioned on the weekend video, which I'll leave a link to at the end of this video, is there's only one number that matters. It is 480. And there's likely going to be a lot of news out there. Sorry, lots of noise with news, economic data, and earnings. Well, we had some noise out of news today with Elon saying that he's going to pull all of his AI efforts out of Tesla if he does not get more of the company, or 25%. Economic data. Well, today we had Canada coming in with some hot inflation reports. So this is causing a little bit of a concern to the dollar, to the 10-year note, and just to risk assets in general. So core inflation in Canada spurs traders to pair bets on the Bank of Canada rate cut. And again, what we're going to do is show you what's happening for the news, but please keep in mind that our goal right now is to tune this noise out. So what I'm trying to tell you is, instead of focusing on all these little data points, we want to focus on levels, because there's going to be lots of noise. Originally, we were at 68 when we saw that the Fed was actually going to pivot. Over the weekend, we were at 76, 78, and now we're back down to 65. This number goes down. It means that we're likely going to see the 10-year note go up, which it did. It's up 3% today. So 10-year note goes up, and that generally means that stocks go down. What's unusual here is that the dollar is up by 0.7%. Pretty big move. The volatility is up by 4%. The 10-year note is up by 3%. The NASDAQ's basically down 4 cents, or I think it's down to a perfect doji so far this year. It's exactly where it closed out last year at 409.52. It's not positive or negative. It's actually exactly where it closed out last year. And the S&P is just marginally red here. So something's got to give. This is not going to hold up. We're not going to see these stats at the end of 2024, meaning this time next year. Volatility, bonds, dollar, S&P, NASDAQ, those will not all be green so far. And all I'm saying here is that after 16 days, or January 16th, where I'm seeing some more warning signs and just purely looking at year to date. And this number here is going to be important. And again, I'm trying to just show you that the other part is earnings. So let's just go have a quick look at XLF, because we had Morgan Stanley and Goldman Sachs reporting earnings today. Well, we're down a little bit. We're down by 0.69. Elon Musk would be proud. Why? Well, 69. He loves that number. And 42. So anyways, what I'm trying to show you here is that depending on why, if you want to know why the market's down, well, it doesn't really matter. It matters whether or not we are above or below 480. It's the only number that matters. I do not care what news causes us to go up or what news causes us to go down. We are so close to getting to 480 that unless it happens, like there's no point in us getting overly enthusiastic. Our high is 478.6. We need to make it to 479.98 to technically print a new all-time high on SPY. Yes, I understand if we look at SPX or ES or other things, we can get different values. To keep it simple, we're looking at 480 on SPY. It's really, really, really simple. Okay, so I promise I'll come back to this in one more moment, but I just want to set the stage with the notes from the weekend because, like I said, take any day. There's going to be tons of noise. That's going to test your patience. If we're focusing on weekly and monthly candles, we have to give it until the close of the weekly and the close of the monthly. Otherwise, if we're not patient enough to wait until the close of the week or the month, we should expect our money's going to get taken from us to who? People who are more patient. Thank you, Warren Buffett. In your old age, you are wise. And I did not say sell everything, go net short either. This basically says manage the risk because we're going into greed. We talked about that. And that's pretty much it. So lots of noise, just 480. That's it. I'll just quickly remind you about what we went through on the weekend. So I said, hey, double top, this could be now, which means if we go down on the monthly, we're only going to know at the end of the month. But again, stay tuned at the end of the video. That will be queued up on the left-hand side for you. So over 480, good. Under 470, bad. In between is neutral. So when you're driving down the road and you see a yellow light, do you slam on the brakes or do you take your foot off the gas and hover over the brake? Well, yeah, that's exactly what I do. I don't stop in the middle of the road. I stop at the light. Exactly. So because we've gone below 470 to 466 and we've not yet claimed 480, we had something bad happen and now we're waiting for the good. We're hovering over the brake. We're not hitting the brake yet. We're just at a yellow light. On the weekly, we did not confirm this. We invalidated it. So at best, we would probably reset the pattern. And we'll go through that on the daily chart. Otherwise, we have to be ready for potentially 6 months where this is SMH. Again, chips lead tech lead SPY. And when we look here, we have our all-time high. We form a new all-time high, and then it takes 1, 2, 3, 4, 5, 6 months for us to backtest the all-time high. That takes us to like the middle of the year. That's like a long time. Remember, Warren Buffett said, be patient. XLK or technology, same thing. All-time high, new all-time high, 6-month backtest to hold. Same thing here for the DAX. So that's a short-term corrective wave that would long-term be bullish. However, I was expecting going into the year that we were just going to go straight up. And I don't love that we've not come down far enough. So this would be if we keep forming higher lows and higher highs. And this would be if we form lower highs and lower lows on the monthly. So we're going to have to wait months for this pattern to play out. Have patience, please. Otherwise, there's economic data coming out tomorrow out of Europe. Be mindful of that. And this is what I showed on the pre-market stream today, too. We went from extreme fear, extreme greed, extreme fear, extreme greed, extreme fear. Where are we likely going to go? Well, again, read the pattern. It means extreme greed usually leads down to extreme fear. Is this time different? Well, I don't want to bet my whole account on that. We talked about shorts covering a little bit. And we talked about how tech is expensive. So Samsung better deliver something tomorrow. Otherwise, we got some risks. And with this guy being elected in Iowa, I'm talking about Donald Trump, it looks like he's likely going to be the candidate. And people are getting ready for that. Geopolitics among key volatility things. All right, now let's make it so simple. So let's go here to the daily chart on the S&P. And what we're going to look at are going to be the last 3 or 4 candles. That is it. You're going to have to tune in tomorrow or come to the pre-market stream, and we will kick it off with more commentary. So let's just go back in time here. We're going to read the candle. So warning, failed breakout. Well, that happened. It happened on Friday. So we get a failed breakout, technically close green. Okay. Now we look at the next one, lower low and close below the low. Oh, crap. That happened today. So here we have a failed break. Now we got the lower high, lower low, but 2 candles don't form lower lows with an S. That forms 1 times lower low, 1 times lower high. 1 times higher low, 1 times lower high, 1 times lower low. So I would say we're on number 2, early confirmation of a potential corrective wave on the one-day chart. So the next thing we look for is that we want confirmation by getting another candle close and closing below the previous low. For us today, that would mean 473. And that'll be important because we've been seeing dip buying here. So obviously those lower tails. One more important note is that we actually have a bearish engulfing candle on the previous day. So by falling below 473, we're also going to be right around where we saw defense likely where those bears were covering. Again, 100,000 contracts covered. So not overcomplicated. That's it. We're looking to see whether or not we get one more candle tomorrow, which would be lower. And if not, please watch the weekend video queued up on the left-hand side. Should give you a lot more context for what I think. And if not, subscribe on the right. I'll be live tomorrow at 9 a.m. Thank you so much for tuning in. I'll see you tomorrow.